What to do if the stock market crashes? There is an old stock market saying, you haven't lost it until you have sold it. True that it is challenging to stay calm when there are things on the fall and hard decisions are to be made about which stocks to keep and which ones to sell. But it is important to stay calm and realize that stock market crashes are inevitable, and in fact we should make the best out of the crash as it presents a lot of opportunities. And in this video we will discuss the top 4 things to keep in mind during the stock market turmoil. Number 1, try doing nothing and remain calm when the stock market crashes. If you are going to panic sell during such a crisis, it could be a great mistake that you will regret in the future. An important thing to remember here is that fear leads to panic, pushing you to sell your investments at a low price during a stock market crash. I know it's very difficult not to panic when every stock in your portfolio is falling fast and you want to ensure your hard-earned money doesn't get wiped off. But when you panic, you could end up selling some great companies that could generate you serious wealth over the long term. Try to think about why you bought them in the first place. Historical data does prove that markets recover after a crash, so instead of selling the stocks out of panic, you should stay calm, review your investment holdings, and allow worthy investments to stay. You will reap the rewards from this when the market recovers later. Number 2, buy stocks during a market crash. People get upset when the market crashes, but this is actually a time to be happy, as such market crashes should be looked at as opportunities for investors. The golden rule is that sell when the prices go up and buy when the prices go down. But we individuals are funny. We like to buy when prices are already high and then panic when prices start to drop. Keep your eyes open during such times, as great companies are usually available at a discount. Look, if there is something worth 100 and there is a 50% sale going on, wouldn't you run to buy it if you truly understand its value? Think about it like Black Friday deals or Boxing Day sale. Don't buy everything that is available at a discount because it's cheap, but if you are confident in your investment strategy and your current portfolio assets, you don't have to change your plan when the market dips. People panic and sell when they see the portfolio in red, but you have to do the opposite. You have to buy when prices come down and sell when the prices go up. If needed, shuffle your portfolio and get out of the losers, but this is a great time to buy future winners that are rarely available at a discount. Number 3, make sure you have your investments in strong companies. People fear the stock market will crash to the point that their money will be wiped off and their investments will become zero. This is like investing in a strong company like Apple and thinking they won't exist overnight. Just because it fell 5, 10, 15, 20, 30, 40% doesn't mean it will keep falling till it becomes zero. Remember that solid companies can't fall to zero with just a single dip in the stock market. Let me ask you something here. Just because Apple shares fall by 3%, has that had any impact on the business of Apple as of that day? People sell off the expectancy that it might not do well in the future, but that is not always how it works. The business will go on as usual once things settle down. When the market falls, even the bigger players go down, and you must be happy that you can buy something at a discount, which presents a great time to buy more stocks. Just ensure you're in fundamentally strong companies, so don't worry about daily price movements. Be in the game with a long-term perspective. Number 4, avoid debt-ridden companies. The easiest way to understand this is to think about an individual who has borrowed beyond what they can afford. Yes, maybe they can make timely payments now, but what happens when they lose their job or income source? When interest rates go up or they face an emergency that demands their time and money. Likewise, companies take on loans to do their business, and a lot of them face hardships when the environment is not good for business and then eventually end up defaulting on them. To stay calm during a stock market crash and do nothing and be a passive observer, you should have invested in strong companies with steady market performance. Ups and downs are common in the performance of any business, but make sure that the company you choose to invest in can stand up on its own even after experiencing a brief down period. You cannot stay calm when your stock investments in a debt-ridden company crash, for the money you have invested here could be lost forever. While they may rebound, the probability is low because the debt eats up individuals and companies, so be careful about them. There are a lot of screeners now available that tell you how much leverage a company has. Over and above everything, guys, when the stock market crashes, everyone's portfolio goes red and you are not the only fish in the ocean. Do not panic when the stock market crashes suddenly. You only incur a real loss in stocks by selling them at a lower price when the market crashes. Remember, there is always calmness and greenery after the cyclone. So keep calm and invest wisely. If you want to know more about the most common mistakes people make costing them thousands of dollars, I would recommend you watch this video next. And if you found this information useful, help us reach a wider audience that will benefit from this by giving this video a like and subscribe to our channel, as we keep coming up with videos on money, personal finance and investing to help individuals like yourself get better with money. Thank you for watching.